Hi tribe, this video was due by the end of January, but for some terrible reason, I was very sickly in January. I had a terrible flu, broke a tooth, I had a terrible screen breakout, and due to all that, I wasn't able to make this video on time. And thank God for medical insurance. Thank God that I had a private medical insurance, because in January, I have lost count of the number of times I've either had to see a dentist, get a prescription for flu, or to even go to my dermatologist. So, and it has been very expensive, including the medication. One of the best financial decisions I made in 2024, last year, was to get a private medical insurance cover. I shared with you guys how much it cost me to get a private medical insurance cover. It was around 78,000 per year, and I did a whole video about the factors to consider when choosing a medical insurance cover, and I will link it somewhere. And at the beginning of this year, this is one of those things I would like you to consider getting for yourself, because see, last year in 2024, we did the 1 year emergency fund challenge, and so many of you participated in it. Over 2,000 of you participated in it. So think of it this way: if you get into a critical illness, or if you get unwell, if you do not have a private medical insurance cover, it means that you have to withdraw that money we saved last year with the 1 billion emergency fund challenge to go to the hospital, right, to pay your hospital bills. So you do not want that. Usually, sometimes we do not know how sick we can get, or we do not know when an illness is coming, and so it's very possible for you to get sick, and then you have to withdraw all your emergency fund, or sometimes you have to liquidate your bonds, you have to sell your piece of land, you have to sell an apartment. Literally, you have to liquidate your investments in order for you to pay that hospital bill. So I actually remember that the other day I was sharing with a friend, and I told her that a few years ago I thought that it is better to start with investing. You know, it's better to start by building your investment portfolio, and then later on get your medical insurance cover. But then recently I've realized that it is better to do both if you can, right? Of course, it means that you have to have access to a certain level of income for you to be able to buy your own private medical insurance. So sharing with her that if you can, it is best for you to do both, to invest and at the same time, at the very least, start building your protection portfolio by getting yourself a medical insurance cover, so that you do not have to start from scratch when you get ill. So yes, that is what has been happening, but I'm okay now, and that is why I'm here to create the first video of 2025's 1 year emergency fund challenge. Now, this year we are going to do it a little bit differently. Last year, I would do a YouTube video every month where I would give you an update to remind you how much money you're supposed to invest by a particular month, and then I would show you a statement of a wealth triber who is taking part in them 1 year emergency fund challenge. I will take you through the statement for me to show you how much this wealth triber has invested, how much interest they've earned, how much has been deducted to go towards withholding tax, and at the end of the day, how much balance they have in their money market fund account. We are still going to have that, because I realize that is very important when it comes to you wealth tribers understanding and setting your expectations of how much money to get you will make from investing in a money market fund or taking part in this challenge. But this year I have also included something different. So far, I have helped 100 of you to set up a CIC money market fund account. Yes, I recently became a CIC money market fund agent, and I will link the video where I shared that update. So far, I have helped 100 of you to set up CIC money market fund accounts, both shillings and dollar accounts. And when it comes to Sanlam, so far I have helped 1,624 of you to set up Sanlam money market fund account, both the dollar and the shillings accounts. You guys asked me so many questions about money market funds, and so at the last year 2024, I compiled all these questions that you've been asking me about money market funds, and so this year in every video update I will be answering at least 5 questions that wealth tribers have submitted to me. And this is very important, because I want us to walk this journey where by the end of the year 2025 I have answered all your questions about money market funds, and so you will be more financially literate. You will have a full understanding of how money market funds work. And so yes, that is what we are going to start with today. The first question that this wealth triber submitted was, what exactly does it mean by compounding monthly? One of the reasons why I recommend that almost every Kenyan should have a money market fund account is because it is one of the safest and best ways to earn compounding interest. Compounding interest means that your interest earns interest. A practical example is, let's say today you open a money market fund account at the beginning of February, for example. You open a money market fund account and you deposit 100,000 into that money market fund account. How a money market fund account works is that every single day, your wealth manager, such as CIC or Sanlam or your fund manager, if for example they say this money market fund is earning you 13% interest per month, so what they're going to do is that they're going to take that 13% interest, they're going to divide it by 365 days, the number of days in a year, so that they can determine how much interest are you going to be earning per day from your money market fund account. And then so what's going to happen, they're going to be calculating every single day how much interest you're going to make from your 100,000. So let's say on day 1 you make 75 shillings, on day 2 you make 50 shillings, on day 3 you make 73 shillings. And so what they're going to do is that throughout the whole month, they are going to add every interest that you earn on every day, and then they are going to add up all that interest that you earned the whole month. And let's assume that this person who deposited 100,000 earned 3,000 shillings in total from their money market fund in the month of February. And so this fund manager is going to take that 3,000 that you earned from your money market fund and that month and deposit it into your money market fund account. And so in the second month of March, they are going to calculate your interest. Remember, in the month of February, they were calculating your interest from the 100,000 that you deposited. But in the month of March, they are now going to start calculating your interest from the 100,000 and from the 3,000 that you earned in interest. And so therefore, it's almost obvious that you are going to earn more interest because they are now calculating your interest from the 100,000 and from the 3,000. And they're going to repeat the same process. In March, you're going to be earning interest every day calculated from the 103,000. And then at the end of March, all the interest that you earned that month, let's assume in March you earned 4,000, they're going to take that 4,000 that you earned in March, they're going to deposit it into your account. And then so now in April, they're going to be calculating your interest from the 1,000, from the 3,000 and from the 4,000. So they're going now going to be calculating your interest from the 107,000. And so you're going to be making more and more money. And so that is what compounding interest is. Your interest is earning you interest. And that is exactly what we mean when we say your money is working for you. So when this wealth tribe asked, what exactly does it mean by compounding monthly? It means every end of the month, your fund manager is depositing your interest into your account, and then from the beginning of the new month, they're starting to compound your interest from the new interest that you earned from the previous month. I hope that is clear. And yes, I do have a whole video guide about compounding interest explained. That's the name of that video, and I'm going to link it here or somewhere in the description box or pinned comment. So please watch that video. Second question from this wealth tribe is, the annual management fee, is it on interest or the deposited amount? So remember, every money market fund manager in this country will charge you management fees. Why? Because they are investing your money on your behalf. Using the same example when we were explaining compounding interest, our wealth tribe who deposited 100,000, you deposit 100,000 in your money market fund account and you have an expectation that this 100,000 is going to earn you interest. How do you earn interest from a money market fund account? Or rather, how is the fund manager able to generate that interest that you earn from your money market fund account? Is because that fund manager is going to take that 100,000 and is going to invest on other financial instruments to be able to generate that 13%, that 14%, that 15%, that 10%, whichever. And so this fund manager is taking your 100,000 and investing that money, for example, in treasury bills, which is loaning money to the government in the short term, corporate paper, which means loaning money to other corporate companies, and fixed deposits, right? Fixed deposits in banks. And so they're taking the 100,000 and investing it on your behalf to be able to generate that interest that you're going to earn. And so because there's no free lunch in finance, they have to charge you a management fee. Wako kazi, right? It's a job that you've actually given them. You've employed them to generate for you interest from the money that you give them. And so these are described as the annual management fee. So usually they have a management fee, and it's usually for most money market fund, the annual management fee is capped at 2.5%. And so they will try to ask the annual management fee, is it on interest or is it on the deposited amount? So money market funds charge an annual management fees on the assets under management. Assets under management is all the amount of money that this fund manager is managing. For example, if the CIC money market fund has 80 billion, right? It is 80 billion that Kenyans have trusted this fund manager to invest in. You know, Agatha's money, John's money, Mwangi's money, Otieno's money. We've given 80 billion to CIC to manage it or to invest on our behalf. So those are the assets under management. And so CIC will charge 2% per year of the 80 billion to invest your money on your behalf. And on the other hand, the same thing, Sanlam. If, for example, Sanlam recently actually achieved 50 billion in their money market fund as assets under management. And so for them, they charge 1.7% of that 50 billion. So it is literally on the deposit amount. It's on the assets, on the total assets under management, and not on the interest that you earn. So that's how it works. The interest earned, is it sent to your bank account or is it added to your principal? Now, when you are setting a money market fund account, you have two options. One, on the application form, you're usually asked, do you want to reinvest? You do want your interest to be reinvested. So this means what I was explaining. You have deposited 100,000. Let's assume on month 1 you've earned 3,000, and so at the end of the month your fund manager is going to deposit or to reinvest the 3,000 interest that you have earned into your money market fund account, and therefore they will now start calculating your interest on 103,000. So tribe asks, the interest and is it sent to your bank or is it added to the principal? So it's upon you. So you have an option to either choose that I want my interest to be reinvested. That is the option that I recommend, because then that means you'll be employing the power of compounding interest that I explained at the beginning. Or if you do not want that, you can also request your fund manager to send your interest back to your bank account, right? To automatically send the interest that you're earning back to your bank account at the end of the month. But you see, now the problem is, if you choose that option, it means that you are not going to be earning compounding interest. So always choose to reinvest your interest so that you earn compounding interest. Yes. Does the interest change over time, and how does that affect the customers? So do money market fund interests change over time? The answer is yes. Why? Remember, I told you, when you give your fund manager money to invest in a money market fund, they are investing that money on your behalf, and they predominantly invest in those three things that I mentioned: treasury bills. Sometimes they do invest in treasury bonds, corporate paper, and fixed deposits. So if the returns from the financial instruments that they are investing in is changing, then of course that has to be reflected in the returns from money market funds. So yes, interest rates of my money market funds are not static, they change over time. Every day and every month, interest from money market funds will change, because the underlying investments that they are investing in, or your fund manager is investing in, the returns are changing. So for example, at the moment we've seen that all the three treasury bills, the 64-day treasury bill, 182 treasury bill, the 91-day treasury bills. And if you're new here and you do not understand the concept of treasury bills, again, I will link a video for you to understand how treasury bills work and how to start investing in treasury bills. So as I was saying, at the moment, as of the time I'm recording this video in Feb, we know that the returns from the 364-day treasury bills, 182-day treasury bill, and 91-day treasury bill, all of them are below 10%. So therefore, you expect that the returns from money market funds are going to start falling, because whatever they're investing in, which is treasury bills, whatever your fund manager is investing in, which is treasury bills, the returns are falling. So it has to be reflected in your money market fund. And if for some reason the returns from treasury bills starts rising, or the returns from whatever they're investing in starts rising, it will also reflect in your money market fund returns, because it's also going to go high. So that's how it works. How does that affect your customers? It affects you in that you'll now start getting less returns. So last year we had very high returns from money market funds. Some money market funds were promising 18%, 17%, 16%, but now almost all of them are going to start coming down, or they've already started coming down. So how it affects you is that you're going to get less interest. But even if that is what is happening, you should still invest. And this is very important, because at the moment, we currently have an infrastructure bond, a tax-free infrastructure bond that has been floated by the Central Bank of Kenya. And I have had a few well-tribers say they're not going to invest in it, because they're looking at the coupon rate and they see it's about 13.9, 14.3% around there. And so well-tribers are like, we are not going to invest in this infrastructure bond because the coupon rate is so low. It's because for the last 2 years, you are used to the 18%. I have people who have bonds in their portfolio, I included, at 18.3%, 17.9%. You are used to high interest rates, and now that you have low interest rates, you do not want to invest. No, that is not the way to go. You have no control about the movement of interest rates in an economy, right? What you have control over is your discipline and your consistency in investing. So yes, we invest when the returns are high and when we invest when returns are low. So you have to you have to consistently invest in your money market fund, in your bonds, in your treasury bills, even if the interest rates are coming down. So have I answered this Wealth Triber? So does the interest rate change over time, and how does it affect your customers? So yes, you will experience less returns, but you have to consistently keep investing. If you set a goal at the beginning of the year to be depositing 83,000, like we are doing, 83,333 shillings, like we are doing with the 1 million emergency fund challenge, you have to consistently do that, whether the returns are high or returns are low. Our job is to be consistent. That is what we can control. We can't control the returns in the market. We cannot control the financial markets. Who regulates the money market funds? Is it the IRA or CMA? Money market funds are regulated by the Capital Markets Authority. The Capital Markets Authority is an independent government body that regulates financial markets in Kenya. And so it is very, very important for you to make sure that the money market fund that you're investing in is regulated by the Capital Markets Authority. And so that is why I encourage you to invest in financial markets. You know, when we say financial markets, we mean bonds, treasury bills, the stock market, real estate investment trusts, money market funds, you know, EFTs and the likes, because they are regulated by the Capital Markets Authority, and therefore you are protected. If anything ever happens to your investment, you can take, you know, a fund manager to court, for example. But if you do not invest in something that is regulated, if anything happens to your investments, like all the scams that we have in Kenya, it means you have no recourse. You can't take anyone to court, you can't recover your money. Yes. Lastly, can I have the compounding formula? If you have it, please provide. So if you go online on Google and search compounding interest calculator, you'll see so many compounding interest calculators that you can use to determine how much return you're going to get from your money market fund or any other investments. I thought it is better for me to answer this Wealth Triber and to answer you guys by sharing an indicative compound interest calculator that I got from Sanlam that you can use to determine, that you can use to predict, right? Remember that is indicative because interest rates change, right? So an indicative calculator that you can use to predict how much money you expect by the end of 12 months, for example. So this calculator will only show you how much returns you can get within 12 months, because remember, these things change. So a fund manager cannot, when it comes to a money market fund, cannot promise you returns above the 12 months period, because interest rates change. And also remember that a money market fund is built to be a short-term investment instrument. So let's go to my laptop to show you how this indicative calculator works, so that you know how you're able to use it to your advantage. This is Sanlam's money market fund indicative investment calculator. This calculator can be used for any money market fund because the math is the same, right? Compounding interest is the same. So those of us who are taking part in this 1 million emergency fund challenge, for example, we aim to deposit 83,333 shillings per month in our either Sanlam money market fund or CIC money market fund at the beginning of the month. The current average annual yield of the Sanlam money market fund is 13%. So we put 13%. And so you can change it to 12%, you can change it to 15%. It doesn't matter, whatever return, whatever the current interest is for your money market fund. So the average annual yield for the Sanlam money market fund is 13%. And then the period is 12 months. Remember, as said, for a money market fund, ideally they will give you a prediction for up to 12 months. Anything beyond that they cannot promise, because remember, the returns of the underlying investments keeps changing. And so the top up amount, those of us who are taking part in the 1 million emergency fund challenge, we want to top up 83,333 shillings per month. And so on the right side of this spreadsheet, you can always write your name, phone number, email address. That is not necessary for now. And so at the beginning of the first month, you are going to have 83,000. So remember, the 1 million emergency fund challenge started or began on 7th of January. So let's assume at the beginning of the month, you deposited 83,333 shillings in your Sanlam money market fund account. At the end of that month, using 13% as the return, you'd have earned, for example, 902,000.77 in gross interest. Sanlam, the fund manager, would have deducted 135.42 as withholding tax from your account. And this is not special to Sanlam. All money market funds, it is the law. All money market funds deduct 15% withholding tax from your interest every month, and they automatically remit it to Kenya Revenue Authority. And then so the net interest for that first month of January would have been 767 shillings. Yeah, 767 shillings, and you'd have ended up with, at the end of January, you'd have had 84,100 as your end of month balance. And I've just realized that by taking you through this spreadsheet, I am setting your expectations for the whole year for those of us who are taking part in the 1 million emergency fund challenge. And so at the beginning of the month, if you deposit another 83,000 top-up amount, 83,000, you would have then had 167,433, because this amount is an addition of 84,100 plus your 83,333 shillings, which is a top up at the beginning of the month. So at the beginning of the month, you would have had 167,433. The same thing, so you'd have earned a gross interest of 1,813.86. They would have deducted 15% withholding tax, which adds up to 272,000, and you would have ended up with net interest of 1,542. And so at the end of the month, you would have had a balance of 168,975. So let's assume again you deposit another 83,333 at the beginning of the month, and therefore you would have had 252,308, which is you get 250,000 as an addition of 83,333,000 that you deposit at the beginning of the month, plus the 168,975. So that is the beginning of the third month, which now we assume we are in March. Yes, because this challenge began at the beginning of the year. And so you'd have earned a gross interest of 2,733.34. They would have deducted 410 shillings as withholding tax, and you'd have earned a net interest of 2,323 shillings, and you'd have ended up the year with a little over 250,000, which is 254,631, and so on and so forth. I will, to ensure that I don't make this video too long, I will not go through all the months, but at the end of the year, when we finally, in December 2025, when we end this challenge, you would have had 1,000,000 shillings and 52,229 shillings. If you made the last top up, you will earn 11,399.15 as gross interest, and you will be deducted, Sanlam will deduct 1,709.87 as withholding tax. Yes, as the withholding tax, and then you'll have net interest. You remain with a net interest of 9,689, and that means at the end of the year you'll have 1,061,918, and so that means that at the end of the year you would have, yes, deposited 1,000,000 shillings, because 83,333 times 12 is equals to 1,000,000 shillings. So for you, you'd have made deposits of equal to 1,000,000 shillings, but you'd have made net interest of this total, what I have highlighted, of 61,922 shillings, which is this total. So yes, this is very important because it sets your expectations for the 1 million emergency fund challenge. Yes. What we've just gone through is an indicative investment calculator, money market fund investment calculator. That calculator is customizable. As you saw me put in the figures, 83,333 shillings is the same way you can delete that 83,000 and indicate 5,000, indicate 10,000, indicate 20,000, whichever amount you're able to put aside every month. So it is customizable, yes, to your needs. This is very important for me to say, because I always get people who are asking, what if I cannot afford the 83,333 shillings per month? Can I still be part of the 1 million emergency fund challenge? Yes, I always say it is better to end the year with 200,000, with 500,000, with 350,000 than to end with zero. So yes, the challenge is open to everyone. Every one of you is welcome to join the 1 million emergency fund challenge. Do what you can with what you have. If you're new here and you'd like to take part in the 1 million emergency fund challenge, how do you actually join in this challenge? To join the 1 million emergency fund challenge, you need 3 things. The first thing you need is a money market fund account that I will help you set up for free. So you can join this year. So last year, let me take you back a little bit. Last year in 2024, when we were taking part in the 1 million emergency fund challenge, we were only using the Sanlam money market fund account. But this year, I thought it fit to to also include the CIC money market fund account when I became an agent. So you need to join the challenge, you need a money market fund account, and I'll help you set it up for free. And so therefore you have a choice. You can either use the Sanlam money market fund or the CIC money market fund to take part in this challenge. So the joining links, the application links for both money market funds account are in the description box, and they are also in the pinned comment. Make sure you use the exact links in my description box or in my pinned comments, because that is the only way I will be able to capture your details to be able to add you to my accountability list. And if you are taking part, or if you took part in the 2024 1 million emergency fund challenge, it is okay for you to join the 2025 challenge and join and save for a different goal. So let's say in 2024 you took part in the challenge, you already saved your 1 million shillings, and therefore you want to join this challenge. It is okay. You can join and save for a car. You can save. You can join and save for your next infrastructure bond. You can join and save for your buying your apartment, whatever. You can join and save for a different goal. Everyone is welcome. The second thing that you need in order for you to join the challenge is decide how much you will invest per month. So any amount from 1,000 shillings is acceptable, but to achieve the 1 million at the end of 2025, you need to deposit 83,333 shillings in either your Sanlam or your CIC money market fund account. So yes, you're welcome with as little as 1,000 shillings, with as little as 5,000 shillings. Everyone is welcome. I prefer that you end the year with 100,000, having saved 100,000, or even 50,000. It is better to end December with 15,000 than to end with zero. So yes, decide how much you'll invest per month. Finally, for you to join the challenge, you need an accountability system to make sure that you smash that goal. So at the beginning of the year, we were very excited about our 2025 financial goals, and you're very excited to join the challenge. But how do I make sure that you actually get to the end of the finish line, which is December, when you'll have 1 million shillings in your account? You need me to add you into my accountability system. So when I help you, or rather when you use the links in my description box or in the pinned comment, the exact links, please, if you use the exact links in my description box or in my pinned comment, I will be able to capture your details, and therefore I will add you to my accountability list. So every month, twice a month actually, I'll send you reminders every 2 weeks to help you stay committed to the millionaire life. So you need an accountability system. So yes, that is simply how to join the challenge. Finally, the last part of this video, I wanted to quickly go through a statement from a wealth triber who took part in the 1 million emergency fund challenge last year, and I wanted to quickly go through this to go through her statement to again set expectations for what you expect from this challenge, because I do not want people thinking that this is a quick get rich quick scheme. No, this is a slow and legit way of building your wealth, or slow and legit way of building your savings. So let's quickly go back to my laptop. Let me show you a statement from one of the wealth tribers for you to be able to know these are my expectations. Yeah, okay. We have the transaction date, when did the transaction happen, the description of the transaction, the deposit, which is how much money you deposited, the interest, how much gross interest did you earn, withdrawal, if you made any withdrawal, and then there is the withholding tax, how much was withheld, the 15%, and then finally the running balance. After they've deducted your withholding tax or deducted any withdrawal that you made, how much is your balance at the end of that month. And yes, you will receive a statement from both CIC money market fund and Sanlam money market fund at the end of every month to be able to show you how your account is performing. So for example, from this wealth triber, she joined the 1 million emergency fund challenge in May 2024. So maybe she hadn't come across my content at the beginning of the year 2024, but as soon as she came across my content in May, she was like, I want to be part of this challenge. So I explained to her that to join the challenge, you have to have a Sanlam money market fund account. For you to set up a Sanlam money market fund account, you must deposit the minimum 2,500 in order for your account to be approved. So she did that in May, and so she was like, I need to catch up with everyone who is taking part in this challenge, and that is why in the same month in May she made multiple deposits. It's okay for you to make multiple deposits in your money market fund account. I always say a money market fund, it's a self-paced investment, which means you can make multiple deposits, multiple withdrawals. So yes, but make sure that you do not do, at the very least, make at least one withdrawal per month, because usually for both CIC and Sanlam Money Market Fund, you have one free withdrawal per month, and every subsequent withdrawal after that you will be charged either 500 for Sanlam or 1,000 shillings for CIC for every subsequent withdrawal. So save on withdrawal fees by only making one withdrawal per month. But then for deposits, you can make as many deposits as you want. And so yes, back to this, Wealth Tribe said that she wanted to catch up with everyone who was taking part in this challenge. And so the same month she made multiple deposits, and that's why on May 21st she made a deposit of 328,335. Yes, and then again on May 27th she made another deposit of 2,500. So now by doing that, she had caught up with everyone who was taking part in the challenge. And so at the end of the month of May, she made, now because she had caught up with everyone who was taking part in the challenge, now she could consistently make deposits of 83,335 shillings per month. So the reason why I'm going through this statement is because this Wealth Tribe made me very excited. She's one of those people who are like, when Agatha says we make deposits of 83k per month, I'm going to make deposits of 83k per month. So yes, after catching up, at the end of every month, she made a deposit of 83,335. So at the end of May, as you can see, May 31st, 2024, she earned an interest of 1,430 shillings, 0.20. And people who are going to be in my comment section saying, after depositing 416,670, why is she earning little interest of 1,430? Remember, here at the Wealth Tribe, I do not show you get rich quick scheme. This Wealth Tribe, the Wealth Tribe is about making money legit way, slowly, because that is the only way to build sustainable wealth. So yes, do not come with your comments in the comment section saying she made little money. She did not make little money. This is not a get rich quick scheme. So yes, she made 1,430.20 in interest that month. They deducted 15%, 214.53, and then at the end of May she had caught up with everyone, so she had 417,885.67. And so in the end of June, because now she had caught up with everyone, she earned interest of 4,000. So you see, now her interest is bigger at the end of June. So she earned interest of 4,835.48, and a withholding tax of 725.32 was deducted. And so she earned, at the end of the month, she had a running balance of 421,995.83 shillings. And so in July, she continued being the consistent girly that she was. She made a deposit of her 83k 335 shillings. That's in July. And again, she made another deposit in July of again 83,335 shillings. So she wanted to make sure she has caught up with the challenge, 83k 333 per month. At the end of July, she made an interest of 6,237.86. Withholding tax of 935.68 was deducted. And in August, consistent girlie, she consistently caught up with the challenge and never made even one single withdrawal, because she wanted to make sure at the end of the year she's at $1 million. Again, the same trend continues. In August, she made the same deposit. In September, she made the same deposit. In October, she made the same deposit. And by the end of October, she was now making at least 10,000 in interest, in passive income. And so she made 10,036.57 in interest in October. They deducted 1,505.48 as withholding tax. Again in November, the consistent girlie, she made another exact deposit. And finally in December, when we were ending the 2024 challenge, she made another deposit of 83,335 as always. So by the end of December 2024, she was making 10,000 shillings. 10,000, she made specifically 10,681.55 in interest from her money market fund account. 1,602.23 was deducted as withholding tax. And so yes, at the end of that year, at the end of 2024, she had 1,050,489.62 as her closing balance. So she did it. She became a millionaire in 1 year through her savings or through her investment in the Sanlam Money Market Fund account. I also wanted to show you that by the end of now, we are in a new year. by the end of January 2025. So I don't know if she will continue depositing money in this account, but clearly in January she never made a deposit. So but then at the end of January 2025, even without making any deposit, she made her money continued compounding. Remember at the beginning of this video I explained the concept of compounding interest. So her money has continued to compound this year, and so at the beginning of this year in January, at the end of January, she made 11,087 shillings 0.27, 1,663.09 was deducted to go towards withholding tax, and so her running balance at the end of the month of January was 1,059,913. So this is someone who's making compounding interest, or who is making passive income without an additional amount into her money market fund account. Just like that, well, Triber, that is my dream for you to have 1 million shillings at the end of this year in your Sanlam money market fund account. I will repeat, it's okay for you to have less than 1 million. Do what you can with what you have. It's 5,000 that you can't do it. If it's 10,000 that you can't do it, just make sure you're doing something about building yourself financially, or taking yourself a step closer to financial security as you can. For you to join the 1 million emergency fund challenge, you need a money market fund account. In the description box or in the pinned comments, I will leave the links that you need in order for you to set up your either Sanlam money market fund account or CIC money market fund account. I have had requests from Kenyans living in diaspora. They've asked me if it's possible for us to do this challenge in dollars. Yes, it's possible for you to do this challenge in dollars if that is what you want. If you prefer to not convert your money to Kenyan shillings and just invest in dollars, you can have a dollar money market fund account. And so I will leave links for both a dollar money market fund account and a shillings money market fund account in the comment section. Choose what you want. Just remember that, for example, for the CIC dollar money market fund account, you need a minimum of $1,000 for you to set up the account. For the Sanlam USD fixed income fund, which is a conservative fund that you can save you can invest your dollars in, you need at least, or you need a minimum of 2,500 USD for you to get started. So that is why usually for a lot of us it is easier for us to start with the shillings money market fund, because for the Sanlam money market fund you need 2,500 shillings to start. For the CIC money market fund you need 5,000 shillings to start. But yes, for those of you who need to invest to take up this challenge in dollars, you can. So I will leave links for individual shillings money market fund accounts, links for individual dollar money market fund accounts. If you want to take up this challenge with your chama, with your company, with your spouse, with your sibling, it's okay. With your parent, it's okay. I will also leave links for corporate money market fund accounts and links for joint money market fund accounts. Any, the good thing about money market fund accounts is that they can be customized to whatever you need. And so if you watch this video in February, it definitely means that by the end of January, we were supposed to have 83,333 shillings in our Sanlam money market, in our Sanlam and CIC money market fund accounts. And if you, at the end of February, we are supposed to have 166,666 shillings in either of the money market fund accounts. So that is a Feb update. Of course, by the end of Feb, because now I'm no longer going to be sickly, hopefully I am going to create that video and upload it on time. And that's it. So because at the beginning of this video I said if you have any questions about the challenge, if you have any questions about money market funds, leave them in the comment section, because those are the questions that I'm going to be answering in my subsequent videos. If you're new here, my name is Agatha from the Wealth Tribe, and this is where we learn how to build wealth together. Bye bye.